Imagine waking up one day to find out that the prices of everything you buy, gold, silver, even your groceries, are being secretly jacked up by the very government that's supposed to protect the free market. What if I told you this isn't some conspiracy theory, but a hidden reality that's costing you thousands every year? Welcome to Bullion Alert HQ, where we uncover the truths the mainstream won't touch. If you're new here, hit that subscribe button right now and turn on notifications so you never miss an alert on how to protect your wealth. Today, we're diving deep into how the US government is rigging prices upwards, ending the illusion of a free market. Stick with me, because by the end, you'll know exactly how to spot these manipulations and safeguard your investments. Let's start with the basics. What we call the free market has been anything but free for decades. Governments intervene all the time, but lately, it's not just subtle tweaks. It's outright rigging to push prices higher. Think about inflation. It's not just natural economic cycles. The Fed prints money like it's going out of style, flooding the system and driving up the cost of assets like precious metals. But why upwards? Simple. Higher prices mean more tax revenue for the government, and it keeps the debt machine running without immediate collapse. Remember the 2008 financial crisis? Bailouts weren't just saving banks. They set the stage for endless quantitative easing, which artificially inflates asset prices. Gold and silver should be your hedge against this, but even those markets aren't immune. Regulators turn a blind eye to big players manipulating futures contracts to suppress or inflate at will. Take the COMEX. It's supposed to be a fair exchange, but insiders know it's rigged with paper contracts that dwarf actual physical supply. This creates artificial scarcity or abundance, pushing prices in directions that benefit the elite. Ever wonder why gold spikes during uncertainty but then mysteriously drops? It's not market forces, it's intervention to prevent a full-blown panic that could expose the system's fragility. The government doesn't want you hoarding bullion. They want you in fiat, where they control the value. So they use tools like interest rate hikes to make holding cash seem appealing, indirectly rigging commodity prices up. But hold on, it's deeper than that. Policies like tariffs and subsidies distort global trade, making imports costlier and domestic prices soar. For example, recent trade wars with China aren't just about fairness. They're designed to inflate US manufacturing costs, which trickle down to you. Your everyday items get pricier, and the government collects more in duties. This isn't accidental. It's a strategy to combat deflation, which terrifies central bankers. Deflation would make debt harder to service, so they rig inflation upwards to erode your savings slowly. Picture this. You're saving for retirement, but every year your dollars buy less because of these manipulations. Bullion Alert HQ is here to show you how precious metals can fight back against this silent theft. Let's talk history. Back in the 1970s, Nixon closed the gold window, detaching the dollar from gold. That move unleashed unchecked money printing, setting the stage for today's rigged system. Since then, every administration has doubled down, using fiscal stimulus to pump prices higher. Obama's recovery acts, Trump's tax cuts, Biden's infrastructure bills, all fuel the upward price rig. But it's not just presidents. The Federal Reserve is the real puppet master. Their dual mandate of employment and price stability is a cover for keeping inflation just high enough to rig markets up. Ever notice how stock markets rally on bad news? It's because investors expect more government intervention, which means more money chasing assets and prices going north. In the bullion world, this means gold isn't allowed to shine too bright. When it threatens to expose fiat weakness, interventions like selling reserves or hiking rates cap it. Yet, paradoxically, long-term rigging pushes prices up as trust erodes. That's the curiosity we'll unravel, how short-term suppression leads to explosive upward breaks. Stay tuned. We're just scratching the surface. In the next part, we'll expose specific government tools used for this rigging. For now, think about your portfolio. Is it protected? If not, subscribing to Bullion Alert HQ could be your first step to real financial freedom. Now that we've set the stage, let's peel back the layers on the exact mechanisms the US government uses to rig prices upwards. It's like a magician's trick, but once you see the sleight of hand, you can't unsee it. First up, monetary policy, the Fed's favorite tool. By keeping interest rates artificially low for years, they encourage borrowing, which floods the economy with debt-fueled spending and pushes prices higher. But when rates rise, it's not to cool things down. It's to prevent bubbles from bursting too soon, maintaining an upward trajectory. This yo-yo effect rigs asset prices in a controlled descent, benefiting insiders who know the game. Take quantitative easing. It's basically printing trillions to buy bonds, inflating everything from stocks to real estate. The result? Your home might be worth more on paper, but everyday costs skyrocket, rigging the market against the average Joe. In bullion terms, this means silver and gold get caught in the crossfire. Paper markets dilute physical demand, but underlying inflation eventually forces prices up, creating volatile swings. Why not let the free market decide? Because a true free market would expose the dollar's weaknesses, leading to hyperinflation or collapse. something no politician wants on their watch. Instead, they use fiscal tools like deficit spending. Trillions in annual deficits mean more bonds issued, more money created, and inevitably higher prices across the board. Remember the COVID stimulus checks? They weren't just help. They were a massive injection that rigged consumer prices upwards, with inflation hitting multi-decade highs. At Bullion Alert HQ, we've tracked how this affects precious metals. Gold broke $2,000 an ounce post-pandemic, not by accident, but because the rig couldn't hold forever. But here's the twist. Regulations play a huge role too. Laws like Dodd-Frank were sold as reforms, but they centralized control, allowing easier manipulation of commodity prices. For instance, position limits on futures are unevenly enforced, letting big banks dominate and rig prices to their advantage, usually upwards in the long run. This creates artificial rallies that trap retail investors. Environmental policies add another layer. Green energy mandates drive up demand for metals like copper and silver, rigging their prices higher under the guise of sustainability. Your electric car battery costs more because of government subsidies and restrictions on mining. Trade policies, like sanctions on Russia, cut supply chains, forcing prices up for oil, gas, and even gold. It's not free market competition. It's geopolitical rigging, disguised as national security. Antitrust inaction is key too. Mega corporations consolidate, reducing competition and allowing price hikes without pushback. The government looks the other way because higher corporate taxes fill coffers. In the housing market, zoning laws and subsidies rig prices sky high, making affordability a joke. This spills over to bullion as people seek alternatives, but even there, taxes on gains rig the game upwards. Curious yet? We're building to the big reveal, how this upward rig is unsustainable and what happens when it snaps. Don't stop now, the payoff is coming. At Bullion Alert HQ, we empower you with this knowledge. If you're finding this eye-opening, like this video to help spread the word. As we head into the home stretch, let's connect the dots on why this upward price rigging spells trouble for the so-called free market. The end game is closer than you think, and understanding it could save your wealth. The core issue, endless upward pressure creates bubbles that must pop. We've seen it in tech stocks, housing, and now it's creeping into commodities like gold, where prices are rigged to delay the inevitable explosion. But why rig up instead of down? Downward would mean deflation, debt defaults, and political unrest. Upward keeps the illusion alive longer, buying time for the elite to exit. In precious metals, this means suppressed volatility. But when breaks happen, they're massive upward moves. Remember 2011, when gold hit Shanghai 1800? That was a glimpse of the rig failing. Today, with debt at $34 trillion, the US government has no choice but to inflate away obligations, rigging prices higher through devaluation. Your dollar buys less bullion each year, eroding purchasing power. Central bank digital currencies are the next rig. They'll allow direct control over spending, forcing prices up by limiting alternatives like cash or crypto. Bullion remains your last bastion of freedom. Geopolitical tensions amplify this. Wars and alliances disrupt supplies, rigging energy and metal prices upwards. Think Ukraine. Grain and oil spikes weren't market-driven. They were rigged by policy responses. Domestic policies, like minimum wage hikes, sound good, but they rig labor costs up, passing inflation to consumers. Small businesses suffer, consolidating power and prices in big hands. At Bullion Alert HQ, we've warned about this for years. Stacking physical gold and silver is your counter-rig, holding value when fiat falters. But curiosity peaks here. What if the rig collapses? Hyperinflation, market crashes, or a new gold standard? I'll reveal signs to watch for. First sign, yield curve inversions, signaling recession but rigged recoveries with more printing. Second, commodity supercycles, where suppressed prices erupt upwards uncontrollably. Third, public distrust, leading to runs on banks or bullion shortages. When that hits, prices won't just rise, they'll skyrocket. To protect yourself, diversify into tangibles now. Avoid paper assets. Go physical and store wisely. We've covered the rig from start to potential end, but the story evolves daily at Bullion Alert HQ. What do you think? Is the free market truly over? Drop a comment below with your thoughts on government rigging. Do you see it in your daily life? And if this opened your eyes, share this video with a friend who needs to know. Thanks for watching till the end. Your time means everything. Hit subscribe if you haven't, and we'll catch you in the next alert. Stay vigilant.